Well, good morning. Welcome to this Prism webinar on how to maximize the value of your business with a focus on customers. Let me just move forward. So to introduce myself, in case you haven't heard me or met me before, I'm Peter Watson. I'm Managing Director at Prism Corporate Broking. I'm an accountant, but I've been knocking around in this space for quite a few years now, and over that time have advised a lot of technology businesses, and hopefully built up some good experience about what buyers value. I talked last week about the technology, but this week we're going to talk about customers. For those of you also not familiar with Prism Corporate Broking, we are a business broking and advisory boutique, and we specialize in helping owner managers to buy and sell technology businesses. For us, technology is predominantly software, IT services, maybe telecoms, infrastructure, and certain other technologies like environmental. It's not actually specifically drug development, so we don't operate in the biotech sphere. Just to give you a few examples of the sorts of things that we have brokered, you can see there's a fair number of sort of software businesses in there. Business, trying to pull out any that you might be familiar with. Arm, who are in the news at the moment about whether they're going to be sold. We sold a business, NextGcom, to them to do with IoT, but you may recognize a smattering of names on that. Equinity is one that you may have heard of. So before I start, just wanted to sort of draw your attention to the question and answer panel within this webinar. Please do send us your questions. If you have a question as you're going through, send it. Alison Lewis will be acting as the moderator, and she will send through those questions to me at the end. We're going to hopefully have a few minutes at the end to answer questions. Alternatively, if for some reason the question doesn't come out until after the webinar is over, do email me. My email address is on the screen now. So I'm going to talk about the importance of your customers in evaluation, because although you're a technology business, actually for most technology businesses, it's still the power of the customer relationships that drive a lot of value. For most businesses, earnings potential is still the key determinant of value, and customers are the way in which we make money out of our technology. I'm going to talk about these different areas each in turn, and I'm going to spend a little bit of time because it really is absolutely key in terms of valuing a business. So first off, the importance of winning new business. It's absolutely critical for a customer an acquirer to believe that you're capable of winning new business. To that extent, what we really want to be able to show is a business development process, something that is not reliant on the skills of one stellar salesperson, but actually is a process involving a number of different people, where you understand how to get the customer from one stage of their journey to the next. We understand each of those stages. And we have effectively a way of bringing firstly customers into the top of our sales funnel, and then converting them through to get business out the bottom. That brings us to the concept of the customer pin. So we really want, talking about this, we really want to you to be able to know what customers you need to put into your funnel to get what sales out the bottom end. So if you had a customer pin of 10 for 1, that would mean that you put 10 customers into the top of your funnel to perhaps get 4 meetings or quotations to get 1 sale out the bottom. Now, if you know those metrics, then a buyer can look at you and think, well, What happens if we double or triple the number of new inquiries coming in? In that case, we can then actually compute what the change to our bottom line is. So it's absolutely critical to have an understanding of those sorts of metrics. Don't underestimate also winning business through the sales process itself. And when I say the sale process, I mean the sale of your company process. It's a very powerful thing when a company is looking at your business and they've half committed to go through, and they're starting to get sort of the normal doubts, are they paying too much and so on. It's really helpful if you can actually drive some or show them some new business wins. So the key is to keep selling, keep managing the business during a process, not become engulfed in the process itself of selling the business. Next up is income, and by that I mean acquirers will be interested to ensure that the income that you received last year, you're still going to receive this year. They're only really interested in the future. So what are the things that give them confidence that you're still going to be earning, you're still going to be at 3 million, 5 million sales next year? What are the things that give them confidence? Well, I guess the thing that gives them the most confidence is the presence of long-term contracts. So this is contracted revenue. So we've got an agreement with a customer and they'll pay us, £100,000 this year, next year, and the following year. That is really, really helpful in a sales situation to give comfort to an acquirer. One of the things that we sometimes come up against is that clients have monthly rolling contracts, and they're keen. They say, well, they keep renewing, it's not a problem. That's fine, but from us, when you get a sales situation, the buyer will be aware that those customers could terminate, and therefore the risk of buying the business and then the income falling off is very real. So if you can get those contracts onto a longer term basis, even if it's a year with an auto renew, that is much stronger sales proposition when it comes to sell your business. I know people are sometimes wary of talking about contracts with their customers, fearful that they'll want to go out to the market again. But I think for the best businesses that we work with, they are talking to their customers at an early stage about renewing. They're not frightened of having those conversations. Indeed, they're keen to understand just what the problems or potential problems are, so that they can sort them or so that they remove them from the equation, shall we say. So I think don't be frightened of having those early conversations about renewal. At worst, you will get an indication from the customer about what's wrong, and you have a chance to put it right. So importance of long-term contracts. You also need to be able to demonstrate that there's actually an ongoing pipeline of business, of new business. Now, this doesn't mean just pulling the sort of, in the due diligence process, scrambling together to put together a pipeline. We really want to see a pipeline that is managed on a regular basis. You're looking at probably on a monthly basis, and ideally actually tracking the value of that pipeline, so we can see whether things are getting better or worse, and it gives you a sort of forward-looking indicator as to how the business is doing. On dependency, this is really a question of not having all of your eggs in the one basket. So does your largest customer represent more than 10% of the sales? If so, then ideally you really want them onto some sort of long-term contract to give the buyer comfort. So clearly we're looking for a spread of customers, none of them so big as to be a problem. Now, that's an ideal world. We come across many businesses where there is a larger client or clients, and then I think we'd be looking for either the sort of contractual arrangements with them, or to understand the barriers to them exiting. How difficult would it be for them? So really assessing the risks of customer loss, particularly where we've got a dependency. Now, valuing a business is all about the future, and if we can show that the business is growing, then we're likely to be able to achieve a higher value than if it's stagnating. Indeed, we may not be able to, it would be more difficult to sell a stagnating business. But one of the other aspects of growth is from existing customers. So is there opportunities within your existing customer base to sell them more things? And when I talk about a blue chip customer base, I'm really talking about larger customers giving you a greater opportunity to sell a bit more through them. You could have a model set up for selling small amounts to a multitude of customers, but in that case, you really need an absolutely fantastic new business development process to ensure that we can keep filling that sales funnel. What also about the markets that you're operating in? As an SME business, you are nimble and able to move your business into different areas, and so really you need to be thinking about what are the areas that are going to be growing, because they're the ones that you need to get into first, and then when the larger company comes looking to bolster their presence in a particular area, you are the go-to people, and they'll pay a premium for that. Next up, I want to talk about the quality of the relationships you have with your customer. Now, you'll all say to me, well, we have very good relationships with our customers, but if you're the acquirer, that is not a given. It could be that you had very good relationships with your customers, but recently, actually, they've come under some pressure. How do we provide evidence to give them assurance that actually the relationships are blossoming? Well, to some extent, the client being retained is a good sign, but in and of itself, it's not enough, because selling your business is a sort of crystallization event. And if there have been problems, it may be the final thing that leads customers to going elsewhere. So client retention is one thing, but we really need something to measure how well we're doing, how well are we performing, and that might be sort of performance against service level agreement. So we have we actually track those figures and we can say how we're doing, but it could be a more informal feedback mechanism, and we see quite a lot of these, the sort of traffic light type system. And if you get enough feedback from enough customers, you can start to chart this and actually see just where things are going. So I think there are a number of sort of programs that you can follow, but actually they don't need to be expensive. But I think having some sort of feedback mechanism for customer satisfaction is really helpful for most businesses, and certainly when you come to selling your business. And then finally, I just wanted to talk about the sort of closeness of the relationship that you have with your customers. So how intimate it is. I talked a bit about before, when you have a dependency on a particular customer, you need to be thinking about what are the things that would stop them leaving. I'm also interested in the sort of level of interaction that you have with them, and I put up sort of two contrasting models here, where on the one on the left you have a sort of single point of contact. On the one on the right, you've got multiple points of contact across your organization. Now, the latter is a much more stable relationship, because the knowledge of your business is shared amongst a number of people on the client side. So we much prefer to see relationships like that, rather than centered on the relationship between you, say the owner manager, and someone in the organization. Clearly, if you are potentially going to leave, that puts that relationship at some threat. But also, what are the barriers to exit, the non-contractual barriers to your key customers walking away? Now, that might be that you've developed specific customized software for them, which someone else would have to replicate to remove you. It might be that you have a presence on their premises, which makes it more difficult for the relationship is very embedded in their organization. Whatever it is that stops them leaving, or we think would stop them leaving, we need to be very clear about that, because in the absence of a long-term contract, there's a risk to the buyer. I'm just going to talk a little about where examples of deals where we believe that customer relationships were actually key to that deal. They're all recent examples, I think sort of around February, March this year. First one is IAMART. You may have come across them. They're a quoted cloud services provider. And they bought a private business called Memset. That's run by Kate and Nick Craig Wood. Actually, what Memset do is very similar to what IAMART do. But the key reason for the acquisition, we believe, was to acquire the 2,000 customers that Memset have. IAMART paid just over 3 million. I think potentially 4 million on an earnout, which equates to perhaps 10 times profit before tax, although interestingly only 3 to 4 times historic EBITDA, which I guess gives some indication of the level of capital spend required to run these businesses. Now, we think that actually the likelihood of IAMART running 2 separate cloud centers is remote. So we think over time it's likely that the sort of technology will all be migrated to the IAMART's data centers. So really, what are they buying? They're buying the customer relationships. Next up, another quoted business, UK business, Midwich, actually made its first foray into the US with the acquisition of Starin Marketing. Now, Starin Marketing operates in the audiovisual sector. They actually a substantial business in terms of revenues, around $200 million. But the key thing was the host of trade relationships that they held in the US. Midwich actually paid around 8 times EBITDA, which is a reasonable multiple for that type of business. And we think really that's the key, was those relationships. And then finally, a business, Equals Group. They own the FairFX currency business. They acquired Casco FX, which Casco FX do international payments. They have over 1,000 corporate customers. Once again, we think that the logic behind this is to bring those customers onto the Equals platform. We think that over time the technology will be migrated from Casco to Equals, maybe keeping some of it, but broadly speaking, they won't be operating 2 separate businesses. So the key reason for acquiring was to obtain those 1,000 customers. Okay, how are we doing for time? I want to have a few minutes for questions. So what can you do now to strengthen the case you have for your customer and the customer relationships that you've got? Never a bad time to review your business development process and understand your customer PIN. I talked about, yeah, it's going to come under scrutiny. Particularly if you sell to a US buyer, they are absolutely focused on sales. So you really need to be able to describe your business development process. That will be food for their ears. Measure your pipeline and track it monthly. It's a discipline that many businesses somehow get out of the habit of doing, but it's absolutely key, and it's never more important than when you're selling a business. So it's a really good thing to get up and running. And by the time you actually sell your business, you'll have some months data to actually be able to see whether things are getting better or worse and take action. Consider very hard whether you can migrate key customers onto longer term contracts. There are almost always opportunities to do it. They may need some incentive, and you might be able to give it in return for their commitment. You may be able to hold prices at a certain level for a while, but in the sale process, the benefits of a long-term contract will generally outweigh a small loss in margin, because the risk goes down so significantly. So really consider what you can do with your contractual relationships, if indeed you have those. We talked about the areas of growth, important to be in the areas of growth. You know, what is your strategy? Are you heading into the direction of those new and promising areas? Because you have an opportunity as a small business to get there first. I talked a bit about measuring customer satisfaction. It can be a very, very simple system. Just, you know, were you happy? Yes, no, and then graph the results. Let's track that information and see whether there's a problem perhaps in our customer service, or the support department's getting overloaded. This will be a good way of giving data to the management to be able to see if there's a problem brewing. And from a sales perspective, really, really good to see that your customers are happy. Try and get close to your customers. We talked about the intimacy of the relationships. Nothing better than getting onto a stage together. Now, I know at the moment it would be lovely to be able to go to a conference, but they're all shut. But actually, increasingly, these things are happening virtually, and there's actually no reason why you shouldn't be able to get together with some of your key customers and talk about the way you've helped them in their process. And generally, the people watching those conferences or virtual seminars, you know, will include people that potentially could acquire your business. So there we are, short and sweet. The importance of your customer relationships. For every business we sell, I think almost without exception, it is an element, and for most, it's a very key element. So I just want to see whether there's any questions come through. I appreciate that while you're listening, it's somewhat difficult to be tapping away on the screen, but nonetheless, if you've got a question that you'd like to ask, just tap it in now. And I'll try and answer. I'll give you a moment or two to do that. Just tell you about the next webinars that we've got. We've got the final one in this series is talking about the value of people and management in terms of building business value. That is on Tuesday, the 8th of September. So we really look forward to seeing you for that. And we also have a more comprehensive virtual seminar. It's a morning. We have guest speakers and so forth, and that's about how to get top value for your technology business. So it really looks at all aspects of getting value, particularly focused on going through a process. So we do hope you can come to those and join us with those. Let's just see if we've got some questions come through. Right. So I've got a question from Phil. Is it worth discounting prices to get longer contracts? I mean, I guess to some extent that's, you know, some, I prefer to think of it in terms of putting up your prices less rather than necessarily discounting. But if you were going to put through a price increase, and in return for signing a longer contract, you keep the prices at their current levels, or reduce it less, or increase them less, that is also a win for the customer, and perhaps enough to allow them to go on to a longer contract. So there's many ways to play it, but you do need to give them some sort of incentive to sign on the dotted line. A question from Jane. Will a buyer want to talk to my customers during the due diligence process? And if so, how can we handle that safely? I think as a general point, it is becoming much more common for buyers to want to speak to customers at the latter stages of a due diligence process. So you should definitely be prepared for the request to speak to customers. We would want to ensure that came once basically the agreement had been finalized, so we were happy with the terms of it, and we want to also control the nature of how that interview took place. We'd want to be present. We'd want to know what questions were going to be asked and so on. But it is now becoming increasingly common. So I think it's not enough anymore to say, no, we're not going to allow you to do that, because for many corporate businesses, it's a tick box on final approval. So we're going to need to manage that. I have to say, in our experience, customers are generally pretty happy to talk about that, and they're going to say nice things about you on the whole. But it's worth having a little thought about that, and hence, I guess, the reason for sort of looking at your customer satisfaction levels, ensuring that customers are happy. But generally, it doesn't generally cause problems. If anything, it just gives greater confidence to the buyer. Okay, we're getting close to the half an hour that I think we've allocated for this webinar. Let's just see whether there are any other questions coming through. Okay, I think we've probably got time for one more question. Dave has asked, is having very large, well-known customers always a good thing? What about relative negotiating might? Okay, well, that's a good question. And we certainly have customers that feel bossed around by some of these large purchasing departments, but others who stick their ground a little bit more. You've got to remember that these large companies are used to pushback from other large companies, and therefore, if you push back as a smaller company, it's not new to them. They are getting these questions from other customers. It's just that they feel there's a power balance that they can push a little harder. But I think you can withhold against them, and it's maybe it takes a little longer to finalize the contract, but if they want the service that you're providing, then they will be prepared to pay for it, and you can often get these change of control clauses, for instance, eliminated from the contract. But obviously it depends. But I think having well-known customers is generally a positive from a sales perspective. Larger customers to have the potential to generate more business, and they're seen as a positive. So I think don't lie on your back and be taken to task over the contracts that you do with them. Stand up for your rights. If you know it's unfair, then it's unfair, and feed back to them on that basis. They will be used to that from other customers. Okay, it's now 1:30, so I'm going to close off now. I'd just like to say thank you very much for your attendance. Do, as I mentioned before, do have a look in your diaries, see whether you can attend the next webinar, which is on the Tuesday the 8th, or indeed this half-day seminar on the Tuesday the 22nd of September. Very much hope to see you then. If you have any questions that we didn't answer, please email them through to me, and we'll do our best. So take care, stay safe, and see you next time.